property prices for the second month in a row in February. According to the latest figures from the Central Statistics Office, property price inflation in the year to February also eased. Brian Finn of our business staff has the details. Brian.
John, thank you. The CSO's monthly look at the property market confirms that a slowdown in the rate of property price inflation appears to be taking hold. After a drop in the month of January, property prices fell again in February when they were down by 0.4% nationally. The decline in the capital was even sharper, with prices down by 0.7%. The annual rate of growth nationally slowed to just below 15% in February. That was down from growth of about 15.5% at the end of January. Some will point the finger at the central bank lending restrictions for the slowdown, but there are a few things to consider when interpreting the CSO figures.
The CSO Property Price Index is based on mortgage drawdowns, and there's a lag period to keep in mind. What we see today is a reflection of what was happening in the market about 3 months ago. At that time, the central bank had signalled its intention to introduce tighter restrictions on lending. That resulted in a rush into the banks as house hunters sought to get approvals under their belts. Commentators say this will cause a lot of noise and a year of two halves in the property sphere.
So the first half of the year we think is going to be very strong. We have a pent-up demand there because of the mortgage approvals that have been given over the last 3 to 4 months in particular. And then as the new rules actually come into effect in terms of the mortgage drawdowns in the second half of the year, we think we will see a slowdown in both mortgage drawdowns and indeed in house price inflation.
There's been much analysis of the potential impact of the central bank rules on the housing market. Some in the property industry believe the overall effect will be largely neutral.
If some first-time buyers are frozen out of the market by the new regulations because they haven't got a big enough deposit, they still have to go somewhere, and the likelihood is they'll go into the rented sector, driving up rents and attracting investors who will buy the properties anyway. So you'll have no change in demand, it'll just be a different mix of buyers.
The question is, will the new rules put developers off the idea of building new houses? The one thing the market needs right now is new supply.
And just to pick up on that last point, that's exactly what the ESRI are warning about today, Brian.
Yeah, the ESRI have their quarterly economic bulletin out, and they're looking at these central bank restrictions, and they think that they've been introduced too early in the cycle of property price recovery. They think developers will be put off getting into the market now and building houses, because that's exactly what we need right now. They think that will put upward pressure on property prices and also on rental prices, because as John McCartney pointed out there, people have to go somewhere, so they'll go into the rental market, and that will put further upward pressure on prices there. Apart from that, the ESRI, they're pretty bullish in their outlook for the year. They're predicting 4% GNP growth here this year and next year, and they think that we'll wipe out our budget deficit some point next year, but they say we shouldn't be tempted to use that to stimulate the economy too much, because it doesn't need it at this point.
OK, thanks very much indeed for that, Brian Finn.